Hello everyone, welcome to this week's live stream. A few last minute adjustments there. Hopefully everything's working okay at your end and you can see what's going on and hear everything. If there are any problems, just let me know via the chat. And if it's slightly quiet, and say just make sure it's all turned up from a volume point of view on YouTube at your end of things. If someone could just confirm that it's all working okay, that'd be great. So I'll just go through some of the introduction stuff before we get started. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, let's just have a quick look at some of the major events over the next week. Then we'll do the usual. So how this works, we go through the usual markets, indices, gold, oil, silver, a couple of FX pairs, a couple of cryptos, and then I'll jump into the questions and answer any questions that have come up. So for next week, it's quite a busy week next week. There's a lot of stuff going on. So August the 16th, it's actually Sunday night, Japan GDP. So how well or not is the Japanese economy growing? So that could be an interesting thing to kickstart the week. Then Tuesday the 17th, UK unemployment and also European GDP. So how well or not is the European economy going? Wednesday, August the 18th, New Zealand interest rate decision. And UK inflation as well. Inflation, clearly a hot topic for markets at the moment. So that could be an interesting one. And then Friday of next week, the Chinese interest rate. So that comes out. So it's a pretty full week of stuff going on. So we'll have a look at the markets in a sec. Just a quick reminder of where to go for more info. So to find out more about the company, doing this with Capital.com obviously. Go to Capital.com. You can open a demo account, download the app, open a real account, all this sort of stuff. To find out more about me, go to davidjonestrading.com. Details on the training course that I run. To any questions after this, drop me an email. My email address is david.jones@capital.com. And you can follow me on Twitter @JonesTheMarkets. And you can follow Capital.com, of course, on YouTube, Twitter, and Facebook. I should say that we launched this stocks channel in the last couple of months, so we're getting some subscribers on there. So that's where we look at individual US stocks every week. The description for the stocks channel, or the link for the stocks channel, I should say, is in the description of this video. So if you have a look at that afterwards, it's down there, and you can subscribe to get updates and commentary on various US stocks. Right, let's kick things off. I think it's been an interesting week. I thought we'd start off with gold, first of all. So this is a daily chart of gold. Got absolutely slammed coming into this week on Sunday, when the week opened. So this here is Friday's close. So this was a week ago. This big red candle that took us down to about 1765 on Friday. Then it got absolutely clobbered, as you can see, on Sunday night opening. Traded down to 1660, so very briefly to new lows for the year. And pretty much a 12-month low, actually, that we saw at the beginning of the week on gold. It was a really odd move. It was almost like a flash crash, I think, that we had for gold on Sunday nights or Monday morning. And it's bounced back really strongly from that. I think it's difficult to make much sense of it, to be honest, the move that we saw and the strong bounce back that we saw on Sunday night. I don't know if it was because of a lack of liquidity or whatever, but as you can see, absolutely slammed. For me, my money is still on a recovery for gold. I think, as I often say in the gold videos we do, it may be some time until we see 2,000 plus on gold, but I'd still be inclined to be a buyer on dips. But I do think there are better markets to trade out there at the moment, because we do have fairly scrappy trend on gold. I know it's a popular market on the channel, so it is one that we always look at. We're going to look at it, I think, in more depth next week in one of the pre-recorded videos that go up on the channel. But really vicious move Friday and Sunday, Monday on gold. But for me, the fact we've seen it bounce back pretty strongly, bounce back more than $100 off those early hours of the week lows, suggests there's still the appetite to be a buyer on dips. But I would see, if it pushes back up towards 1820 again over the next few weeks, perhaps we'll see the sellers come in. So something of a scrappy market, not one of my favourite ones at the moment. As with silver, similar moves in silver. Look at that. So again, the move on Sunday night, Monday morning in silver takes us down to the lows from September of last year. I've said how I think silver is this massive sideways range that we've been in since August of last year on silver. Nothing much has changed on that nothing has changed on that this week. And again, a bounce back. So perhaps we see a gradual recovery back to 26, 27. Again, it got slammed on Sunday, but we've seen a reasonably strong bounce back or a recovery this week. Let's see what happens. But again, fairly directionless markets, and I think there are more interesting markets to trade. From my point of view, as a trend follower, I think there are better markets out there to trade. Let's take a look at oil as we're looking at some of the commodities or precious metals. Let's flip it over and have a look at oil. It's not been the most exciting week for oil, but I think for me anyway, what is telling for oil, again, this is the daily chart, and I think we've got a few trades running on oil at the moment. So oil came into this week, again, pretty much slammed really hard on Sunday and Monday of this week. But for me, what's interesting is these old lows held. I'm a big fan at looking at previous major levels in the market. We saw it trade down briefly below $65 a barrel. This is West Texas crude we're looking at here. So the 20th of July traded down to 64.90. And again, on Monday of this week, the market traded down to 65. And we've seen the market bounce back by $4 from that level. So for me, we've clearly lost some of the momentum that we had in oil since November. But while it holds above sort of 65, I'm still inclined to be a buyer on oil. Let's see. I think if it starts turning down and it breaks below 65, then there's a real chance that perhaps the trend is finally starting to shift on oil. So we'll see. So I can see someone's put in a question about Brent. I think the video we did earlier this week was on Brent. There we go, 9th of August. So I bought it at $67.85 and it's currently $70.80. And I think Brent crude is going to be the same as West Texas pretty much. But as it came up in the comments and we're on oil, let's take a quick look at Brent. So for me, it's the same sort of thing in Brent. We had this great trend. If we pick up the trend from April of last year, see what it looks like. That bigger trend is still intact. But for me, the short-term pivotal level, it's the lows in Brent that correspond to 65 in West Texas at around about $67. Then we've got bigger support back here at 64. So I would still be leaning to being a buyer on dips, to be honest, as I did in the video that went out earlier this week for oil. So I do think we've lost momentum in the last month or so. But just because a market's lost momentum doesn't mean it's about to do a 180-degree flip and we're going to start selling off really hard. Not just yet anyway, from my point of view. We'll see. We'll see how it all turns out. Let's take a look at some of the currencies. I think it's interesting. Euro dollar is interesting. I think I might have flagged this up last week as one to watch. And I do wonder, on euro against the US dollar, this is going back to November. And again, you can see, broadly sideways since then, big range. If we went back a bit further to March of last year, we did have, an uptrend. in the euro, but it's really stalled this year, that euro uptrend. But for me, what's interesting is that this week, euro against the dollar has pulled back, to where we were late March. So those late March lows at 117 ended up being, quite the major turning point for euro against the dollar. We saw the market rally about 500 points from there. I think it's interesting that in the last week, when was it, on Wednesday of this week, we've come back to those lows, those 11th of August lows. The lows set this week on the 11th of August. So for me, interesting market to watch next week. If we saw a bit of weakness, do we see that 117 level hold again? So I think euro against the dollar is one worth watching next week to see if that big level holds. And then you can see bigger support coming in from September last year at 116. I think if we see it start to break below 116, 117, clearly we're seeing US dollar strength, euro weakness. So let's see, we've got those euro GDP numbers out next week, the European economy. So let's see how that performs. But I think it's an interesting market to watch next week, euro against the dollar. And it's the same, I think, with pound against the dollar. Which again it feels like it's been a bit sideways over recent months, pound against the dollar, and we're just sort of hanging around in the middle of the range a bit, aren't we? But I'd arguably rather be a buyer than a seller at the moment of pound against the dollar. But it's all a bit directionless over recent months. Big support from 135.60 through to 137. The market's 138.30 at the moment. It's been in decline for pretty much all of August so far. Let's see what happens, but not that clear as suggest, I think, at the moment to me. What is clear, and I know we sort of say this every week, the moves in stock markets, S&P 500, and I know I'm going to sound like a stat record here, but fresh all-time highs. And once again, even as we speak, it's a market. It's just opened officially, but it's currently pretty much at or near fresh all-time highs again. These trends in these stock markets continue. There's our trend going back to sort of March last year. Buying the dips has been and continues to be a profitable strategy in stock markets. So S&P 500 really strong. For me, even if we, well, not even if we, let's look at where the lows are. 19th of July lows are down ahead of 4,200. For me, only if it starts breaking through there do we even have the first hint that maybe this trend is reversing. So S&P still looks pretty positive. If we take a look at the Nasdaq, I think it's been a bit of a lagger. The Nasdaq, here we go. So the Nasdaq index isn't making all-time highs at the moment, but did make all-time highs on the 5th of August, so only 8 days ago. So that looks still pretty strong. The Dow Jones, some of these big old traditional stocks doing well. Dow Jones made all-time highs, I think, yesterday, and looks like it's making them again today. So these markets are stock markets still strong. Boring. Not boring, but low volatility. But those trends are continuing to go higher. And the DAX, the German index, had been a little bit sideways. There we go. In recent months, even the DAX this week, fresh all-time highs on the DAX, breaking out from this range it'd be in. And lo and behold, even the FTSE 100, arguably one of the more sedate stock market indices, this week we've seen the FTSE trade up to its best levels in about 18 months. So we're seeing, I need to adjust that trend line. Yeah, these trends in stocks continue when it comes to these markets. And I think if we let's have a look at the S&P a second. Hang on a second. What's interesting here is look at the percentage of clients who are short. 17% of clients who have a position on the S&P are short. It's even more with other brokers. And I think one of the things we often discuss in these sessions is reasons why people lose money. And I think a big reason is an inability to trade with the trend. You know, they see a market going up like this market, stock markets have been for more than a year now, and people want to pick the top. Whereas, of course, the least painful and more profitable side of the market has been to be a buyer. So stock's still strong. You know, volatility I think is pretty low. I saw somebody put in there, can you make the S&P go down a bit so I can get into it? And I think it would be good to have a bit more volatility. You know, we had a bit of volatility back here, middle of July, and you can see how tight the ranges have been since then. But all still positive, I think, for stock markets. Crypto. Let's have a look at crypto. I think we did do a video yesterday on Bitcoin. I think it is interesting, the moves. And I think I do have a trade running on this account in Bitcoin. You know, we've been in this sideways trend, this sideways range since May. So we were, 2.5 months into this. And in the last week or so, it's broken out. You know, so normally that would be a bullish sign. And I think it is a bullish sign. You know, after the market going pretty sideways, you know, I wonder if we're going to see the next move higher again, even higher again from where we are now. You know, the market's gone from 29,000, just above 29,000 on the 20th of July to 46.5 today. I think, you know, if we can see a bit more momentum from here, my next target would be a run just above 50,000 on Bitcoin. I think if we can break that, then looking at these highs, 10th of May highs. So I think it's you know, it's got really interesting again. I think over recent weeks, Bitcoin, you know, our trend looks, let's just get rid of these levels that were showing the range. I think we did a video yesterday and I put an order in to buy at 43, which hasn't been filled. Maybe I'll end up missing the boat on that. There's our trend in Bitcoin, lots of support. I think 42 is an interesting area because it was the top of the range in Bitcoin before. And you can see the market broke out, it's come back and it's held. So 42,000 is big support, I think, if it gets knocked back. But I think it's a pretty bullish move on Bitcoin over the last few weeks or so. So yeah, interesting markets to watch. Same sort of thing with Ethereum. Let's have a quick look at Ethereum. Flip it over to a daily. There we go. So same sort of moves. Yeah, we had this. Yeah, top of the range was around 3,000 on Ethereum, and a definite break over the last week and a half or so on that. So a really interesting one to watch there. So that's it. So I think for next week, interesting markets to watch. I mean, stock market still, because the strength is still out there. Euro against the dollar, because we're coming back to what has been a big level. And the cryptos as well, you know, because they have broken out of a sideways range. But let's take a look at some of the questions that have been coming in. So we looked at oil as well. So I covered that. Someone's asked, do you use the COT report? So the COT is the Commitment of Traders report. I must admit, it's not something I look at, but I think it is quite an interesting read. If you've never looked at it, Google it and maybe have a read about it. And it's based off the futures exchange. Is it the Chicago Mercantile Exchange? But it's the percentage of so-called professional traders who are long or short certain markets versus the percentage of smaller traders who are long or short certain markets. And it looks, one of the ways of interpreting it is that smaller traders are usually wrong at major market turning points. So if suddenly, for example, loads of shorter traders were going short, smaller traders, are going short oil, then perhaps the next big move is going to be up. But no, I don't use that myself, but I do find it an interesting read. On the odd occasion, I do look at it, and that's the Commitment Traders report. Is Bitcoin breaking into the 500k zone? I'm guessing you meant 50k rather than 500k. I mean, for me, 50k plus, you know, would be, given the strength, would be the next target, I think, on Bitcoin. We'll see how the next month pans out, or the next few weeks pans out. Which currency pairs are best for new traders? It's a good question. I don't think there's a hard and fast example. I'd probably avoid some of the more exotic currency pairs. You know, I think if you stick to perhaps some of the usual ones, pound against the dollar, euro dollar, dollar yen, that sort of stuff. Then perhaps they're interesting. Here's dollar yen. I saw somebody mention dollar yen, and we fallen out of this trend on dollar yen in early July, and I do wonder, is it trying to make a bit of a recovery, some big swings over the last week or so, but perhaps a bit of a tricky one to call, I think, for dollar yen. I'd still be expecting a bounce next week from dollar yen, but let's see what happens. But I think when it comes to what to trade, I don't think there is a best market in terms of markets to trade. I do think, leaving currencies out of it, if we said what markets are best to trade for new traders, I would say markets that have got good trends. The S&P, for example, it's been one of my great markets to trade this year, because even if your entry is a little bit scrappy and not perfect, going with the trend does buy you quite a bit of leeway. Even if you'd have traded the S&P and clearly buying the dips at some point, let's say just this year, even if your entry is not that brilliant, if you're trading with a major trend, then it is quite forgiving. So for me, it's more about the trend rather than focusing on one particular asset class. I've just reminded myself, sugar, absolutely brilliant market for me this year. So again, I think after stocks, probably the one that's made the most profit. But because again, some great trends in there. And at the moment, even as we speak today, the price of sugar trading out to its best levels since 2017. So we're at a 4-year high from sugar. But some nice little dips to buy into, then just sit with a position and see what happens. Is platinum going to rebound? I think it's an interesting market, platinum. I am long platinum on my own account, and I'm quite a bit underwater. But I think I bought in back here somewhere, back in June, or maybe it's coming back to break even. I mean, this was the trend on platinum, and it fell out of it, and it had been a great trend since the March lows of last year. Fell out of it in June of this year, but I thought, okay, well, maybe we're going to get a bit of a move on and get back into it, and it's plunged again during August. So I even though I'm still long, and my stop loss I think is just down here, if it takes out that low, I'd be out. But I think perhaps the risk is that we are seeing a shift in trend for platinum at the moment. I think that's an interesting one to watch actually next week to see what happens. But so I'm still long at the moment, but I am worried. I'm not worried, but I do think that perhaps we're seeing the trend shift in platinum. It's early days if it is a new trend. So, but I suppose for me, the trade, if I didn't have a trade on, perhaps I'd be thinking, if we rally much up from here and it runs out of steam, is it time to go short? Let's see what happens. It's been an interesting one to watch, but I think perhaps we have seen a shift. Coffee, really interesting market, coffee. And I was going to buy it this week, but I didn't, and I should have done. So perhaps maybe it's one for next week. But we have this trend going back, at least to here, November 2020, and the market really accelerated into July because of drought in Brazil. Anyway, had been around for a while. Plus, what else was it? Freezing. The temperatures dropped to 0 degrees briefly, but again affected a lot of the crop. So we saw quite this pop higher in coffee. It sold off, and I was just waiting for a bit of stability. So I should really have bought in here around about 175. But I do think that broader trend is still up for coffee. So I think it's an interesting market to watch. If I was a buyer now, the closest I'd have my stop would be the other side of 170. So let's see what happens with that. But I still think the trend is still up. But perhaps this was an over-exaggerated move. So I don't have a position at the moment, but I might be looking to be a buyer if it goes down again from here. Euro Swiss franc. Euros. Hang on. Let me type it in properly. What do we think? I mean, that is interesting. I suppose it's not really like euro dollar, isn't it? I think on the one hand, I think we've got conflicting trends, haven't we? Where we've got the market. That's the trend from March of this year. So arguably, the trade to do now, maybe it's the trade we'll do, is to go short. Go short Euro Swiss. So we've had a bit of a bounce back by the euro over the last week. I think it's interesting. It's running out of steam, or it's running a bit out of steam today, ahead of these old highs. These old highs are 108.70. So perhaps the trade. Let's do a trade. So I'm going to go short. I'm going to take the view that the move we're seeing is the same as all these other moves that run out of steam. So I'm going to go short Euro Swiss and see if the downtrend resumes next week. So we'll go 109 for a stop. We normally risk 100 quid on these trades. So if I sell 15,000 Euro Swiss, there we go. So I'm selling at 15,000 at 108, whatever it is, 108.13. Put a stop loss at 109. My risk is 100 quid. Sell. There we go. Done. So for me, interesting, but bit of a level at 108.70. So interesting one to watch next week to see if this downtrend does resume. Could we throw some light on Hood stock? So Robinhood, I think it was a really good trade to sell that spike higher, that crazy move it had. Because I mean, Robinhood is the broker who's only came to the market the other week, didn't it? So when did it come to the market? Here we go. July the 29th, end of July. And then it was a disappointing debut. It sold off, and then it went from the 2nd of August, it was $35 and traded up to 88 on the 4th of August. I think for me, the risk at the moment is that it just continues to drift a bit from here. Let's flip this over to a 5-minute chart and just take a look at things in a bit more detail. I mean, it's pretty volatile again today, isn't it? It's really jumping around. Oh, actually, it's not that volatile. It's moving 5%. So for me, I would be quite happy just to sit on my hands and let some of this madness die down for a bit, and let's have some more established trading and see what happens. But a bit of a crazy one, and that move I think was a great shorting opportunity. And when it had another look at 72, at the moment, let's see what happens if it pulls back into the old range in the low 40s. Let's see what happens down there. But I'd be quite happy to wait. Marks and Spencer. Did we look at those the other week? So the UK retailer. Is that Marks and Spencer, or is it a different one? Yeah, there we go, Marks and Spencer. Let's have a look at it. I mean, it's been doing terribly for years. You know, they were £6 back in 2015. If I draw a trend line on that, but then arguably, you know, the question is, are we seeing the trend reverse? And I suppose for me, if I had to do anything here, I'd be a buyer. I'd be a buyer because we do have, as a sort of a speculative, is the trend reversing? Because it has sort of broken out through 120 in November last year. We've had a run to 170. It's come off. So for me, I'd be a buyer, and I'd want my stop the other side of 120. So let's see. Crude oil, we looked at crude oil. Can we have a look at CLOV? What's CLOV? Let's have a look at those. CLOV, Clover Health Investments, Medicare, blah, 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 blah. It looks, I mean, has it clearly only just come to the market, isn't it? I'm guessing. Because looks like it absolutely slammed on the first day. So it opened at 26 and closed at 17. So again, we don't have that much data to go on, do we? So we need to, be a bit sensible here. We haven't exactly got a lot of data. I mean, it looks. I suppose if you really wanted to buy them, then for me, if I was a buyer now, I'd have a stop under the lowest they've traded so far, which is about $7.50. But again, a bit like Robinhood for me, pretty volatile, early days. I'd rather let things calm down a little bit. Natural gas. Natural gas is really interesting. I've got a trade on natural gas. I think there's a trade in this account actually on natural gas. Got hit yesterday, natural gas. So bought at 391, whenever it was. When did we buy? 27th of July, and it has moved higher, but it took a bit of a hit yesterday. I mean, it's a pretty volatile market, natural gas, if you take a look at it. But for me, that trend is still up, but it does swing around. It's gone from 420 to about a week ago to 390 today. So it's what, not quite 10%. But for me, I'm long. I'm still happy to be a buyer on dips. So for me, if I didn't have a trade on, I think it's quite interesting. 380 is quite an interesting level on natural gas. We had the old highs from here, breaks those highs in the third week of July, and then comes back, and I'll be coming back again. So for me, if I didn't have a trade, clearly nothing today is financial advice and no one's got a crystal ball, but I'd be a buyer, and the closest I'd have my stop would be the other side of 380. I think if it starts breaking 380, then we're going to look to pull back into this range. But if we went back to the daily chart, the trend is still up on natural gas, but it can be quite a crazy market once it gets going. Can we have a look at cocoa? Yes, have a look at cocoa. Cocoa, is it at, I got stopped out with this actually. I think I had my stop in a bit of a stupid position on cocoa. Ended up getting stopped out of it, but the trend is still up, and I've watched it go up and haven't done anything about it. I mean, it's interesting that it came back to that trend line. That trend line goes back to 2017, so it's a 4-year trend. Had a little look below it, and we've bounced back up. So for me, the trend for cocoa is up. If it got hit over the next couple of weeks and traded back to 23.50, I would definitely be looking to be a buyer. But lots of support, longer term support from 21.40, excuse me, through to 2200, and it's quite interesting. It looks like it's broken that trend that it had been in, that downtrend. So it's an interesting turnaround, maybe cocoa, in the last couple of weeks. What's your definition of done money? I don't know. I don't really think about it. Done money. I think I don't know. I think there's a lot of people who are going to get burnt buying, and maybe have been burnt, with some of the meme stocks. So I think it's perhaps a bit too offensive to call it dumb. But I think people who perhaps blindly piled into stuff like AMC, GameStop, it's naive, isn't it? So I think a lot of people's introduction to financial markets in the last year has been some of the crazy stocks. So I think there are always going to be some expensive lessons to be learned, I think, from those sort of moves. Hang on, I've just jumped down a bit too far. What about Duolingo? I don't think we've looked at those, have we? I don't remember looking at those. Duolingo. Oh, again, it's early days, isn't it? It's all a bit early, this, isn't it? We're doing a lot of new IPOs today, and we don't exactly have a lot of data, do we? I mean, what can you make out of that? It only came to the market this week, 9th of August. So who knows? Who knows? Went from 142 to 130. If I was going to trade it today, I'd be a buyer, and I'd put a stop loss underneath the low from yesterday at 130. But it's just, I think it's too early, isn't it, on these stocks from a technical point of view. Russell 2000. Yeah, let's have a look at the Russell. It's the smaller cap, isn't it? Is it smaller cap? Well, it's getting absolutely clobbered today. Oh, it's only short term. Small cap index. Let's have a look. That's interesting, isn't it? That how it has significantly underperformed the large cap stuff. Well, for a while now, I suppose. The last time we saw a fresh all-time high on the Russell was here, wasn't it? Middle of March. Interesting. Looks a little bit dull and boring, doesn't it? The Russell at the moment. Interesting market when everything else is still making fresh all-time highs. I suppose a trade could be buy the S&P, sell the Russell. Could be one sort of pairs trade. But let's flip this over to the hourly charts and see. I think there does seem to be a little bit of a trend going on, trying to go on since midnight July. I mean, from a day trade today, it'd be interesting to see what happens if it gets pushed back to the lows from Wednesday, around 2200. Let's see what happens. So but quite the underperformance there for Russell. Looks distinctly lackluster, I think, doesn't it? Kraft Heinz Food. Let's have a look at that. Kraft. Is it just Kraft Food, I'm guessing? Yeah, Kraft Heinz, there we go. Bit more history on this one. That's really interesting, isn't it? Look at that over the longer term. It's done terribly, isn't it? If we go back to those old highs in 2017, turned it round a bit. So I think what's interesting here actually, the moves since last March, and the moves we're seeing over the last couple of months. Is this a buying opportunity? That's the question, isn't it? So for me, I would be tempted to be a buyer. There you go. I think even though it's broken below the downtrend, broken below the uptrend, sorry, we have this old support at 36 from February of last year. So for me, I'd give it one last chance and be a buyer. Let's do it. We always try and do a stock trades, don't we? So we be a buyer with a stop at 35. Let's do that. So if I go stop at 35, I think that's an interesting trade to do today. We normally risk 100 quid, which means, is that 50 shares? 51, 55, 52. If I could do the maths, that'll do. So we'll buy 52 at 37.64 with a stop at 35. Let's come back to it and see. So I think we did do, I normally try and do a couple of trades on these live streams. I think it does make it a bit more interesting. I think ones we've done in the past, I think that dollar index is one from a live stream at the end of May. That's still going. And I think, what else have we done in live streams? Amazon, that's underwater, that trade from a live stream. Dollar yen was a live stream at the end of July. Nvidia, we went short Nvidia last week. I remember that. That's done on the old chip shortage stuff. So that's up 60 quid from last week, and we'll see how some of these do. The Euro Swiss trade we did today is up a massive £3 so far, and there's the Kraft food trade we did. So let's see how it works, how they all work out. But I think that's interesting. Let's see if it can hold 36. And I think if it loses 36, the risk is that we've got potentially this new downtrend falling. Cardinal Health looks like it's dropped to the trend line. Let's have a quick look at Cardinal. Oh, if I could type it. Let's have a look at it. Fortune 500 company, integrated healthcare services, blah, blah, blah. Let's have a look at it. I wonder what happened then. It must have had, I'm guessing, earnings or something. It came out with earnings that are maybe a bit disappointing. And that can be an opportunity, if something gets sort of slammed on earnings. I mean, it's pretty sideways, isn't it? That's the last year and a half. So again, for me, I would give it one last chance and take the view, has the market overreacted to these earnings, and buy it with a stop underneath that recent low, wherever that low is, $49. So that's it. But it's been pretty disappointing over the last year, hasn't it? You look at what the broader stock markets have done. That's been a bit of a boring one in that one, isn't it? So let's see. Wheat, corn, cocoa, sugar, and coffee on the move up. Yeah, it's been a good week for some of the agricultural commodities. Microsoft and Target. We do Microsoft. We do. What was I saying? We do cover Microsoft on the stocks channel, and it just powers higher. I think, like you say, I mean, a great trend for Microsoft. It looks like we're just a whisker away from fresh all-time highs. So it looks like all-time highs are about $292 a share, and it's just trading below $291 at the moment. But great trends on Microsoft. Some going back to the question that came in really early on about what's a good currency market to trade. I wouldn't limit yourself to currencies. I would try and find markets that have good trends, and there are lots of interesting stocks at the moment, and I'd definitely include Microsoft in that. That's an absolutely great trend. Copper, someone mentioned. Let's have a look. Copper's interesting. I've got a trade on copper at the moment, and I think the trend is still up in copper. Hold on a second. Let's bring it up. There we go. We've had quite a bounce over the last week. So for me, it's almost a textbook uptrend in copper. We've had the run up to 480, 490 in May. It's come off, but it's held over this trend. So for me, the moves we've seen over the last week completely tie in with the trend continuing. So for me, short term would be a run up to 460, and after that, back up to 490. And I think it's only if we start to lose 4 does this trend look like it's in trouble. So we'll see. Can you tell me your positioning on Euro Swiss was? We went short. We went short on Euro Swiss. That was the trade we did on Euro Swiss. Euro Sterling. Yes, I've got a trade on Euro Sterling at the moment, which is underwater. But I think it's interesting going into next week, Euro Sterling, because I nearly got stopped out on it. I think it's interesting that it's broken below that low. Hang on. Those lows from April. And it's sort of made quite the recovery off. So I suppose an aggressive trade here would be to be a buyer with a stop under the most recent low from the 10th of August, which is at 84.50. I think if it starts going below 84.50, I'd be stopped out. And the risk is it goes back to the lows from last year at 83. So let's see what happens. We did look at Bitcoin, natural gas. What do we think about Dillard's? Before we look at that, just remind you of the contact details. So to find more about Capital.com, go to Capital.com. Find more about me and trading stuff during the week. I haven't updated much over the last couple of weeks. I've been a bit on holiday, but DavidJonesTrading.com. David.Jones at Capital.com. If you've got any questions after this, at Jones the Markets, and of course follow Capital.com on YouTube, Twitter and Facebook. Okay, so there's all the details. What were we going to look at then? I've lost my place. Dillard's, DDS. That looks good, doesn't it? Retail. So retailer. It's a great trend, isn't it, for a retailer? So all-time highs today, or maybe not all-time highs, but multi-year. Actually, no, it could well be all-time highs. Multi-year highs. And I think it's interesting when you get a breakout, like we're seeing. Let me flip this over to an hourly chart. We'll see this a bit. I think it's always difficult to know. Do you just go with the breakout? Because it's been stuck in this range, hasn't it? And do you trade the breakout? Do you wait for a pullback? But breakouts normally show strength in a market, so I think that's an interesting one to watch next week from a stock point of view. But again, I'd say to me that looks pretty positive. Dillard's, that one. Royal Caribbean Cruises. I think I looked at that. Did we? I don't think we have it, or we've got it under a different name, and I couldn't find it. Oh, here it is. Royal Caribbean Cruises. There we go. So US dollar, so listed in the US. To me, it looks a bit boring over the last, since February of this year, actually, doesn't it? But I'd probably still be tempted to be a buyer rather than a seller, maybe. But it's just not got any momentum, has it? And I think, so for me, if I was a buyer now, I'd put my stop under 66. But it's gone, it's gone pretty much sideways since February, hasn't it? So that would be an aggressive trade for me, to be a buyer and put a stop under 66. If you wanted to be a seller, there are arguments for going short as well, because it's not been able to get through $82 since July, for about a month now. So from a short-term trade, you can be a seller, but it's just it's not as clear-cut a trend as Dillard's, the one we just looked at, for example, or Microsoft. So yeah. We looked at Euro Sterling. Someone's just said, in my first 2 weeks of trading, I made 600 euros but lost 1,000. That's a very common experience. Most people lose money, and I think one of the main reasons people lose, and there is statistics and research out there to show it, their losses are about twice as big as their winners, which does tie up pretty much with your experience. So what you've done is not vastly different to most people. Most people lose money. There's a lot on that in my training course. If you go to my website, you'll see a little short video on that somewhere, I think. Can we have a look at PPG? PPG. We don't know who PPG are, but let's have a look. Oh, PPG. It's nice and easy. An American company that manufactures and distributes paints, coatings, glass, and fiberglass. All right, let's have a look. I mean, for me, I'd probably be a buyer. Again, we've seen quite a bit of volatility and quite a bit of gaps going on, haven't we? But I would argue that trend is still just about up. The place I would have bought, perfect hindsight trade, would have been back here the day we saw it gap down, then it has a recovery after the gap on the 21st of July. So for me, I'd be a buyer, and I'd put my stop loss at the moment underneath that extreme, which is maybe a bit too far away, but that's where I'd be tempted to put the stop. So it's an interesting one. But these, and again, I'm wondering if this is on earnings. Some of these, some of the more extreme moves we see on earnings can be interesting, and they can be opportunities. I think Walmart, another big US retailer, has got earnings next week. So I think that could be interesting if we get a bit of a gap. Let's see. But we cover more of this stuff on our stocks channel. So have a look at that. Hang on a second. TAL Education. I remember looking at those the other week. TAL Education. Are they Chinese? Is it China? Something to do with China? It's just boring, isn't it? Look at it. It's just going down, isn't it? So for me, that trend is still down. Okay, maybe it's starting to form a base, but look at that. I mean, that is a trend that slaps you in your face, doesn't it? So, it's gone from $90 to $5.50. It's just like, bleh. And it's just done not very much over the last month, so it's just a bit dull at the moment. We looked at Nasdaq. I think we looked at the Nasdaq. SAS, the airline SAS. Do we cover SAS? Yeah, we do. Yeah. That looks decidedly uninspiring, doesn't it? What's going on with their stock? It's not really done much this year. It looks pretty dull, doesn't it? Pretty dull. So, yeah. It's just a bit sideways. I mean, again, if it got knocked from here, if we had a shock and it got knocked down to 1600, perhaps it's an opportunity. But it's ones like that I would look at them and think, I'll look at something else for me, because it doesn't fit, the trend or anything. Can we have a look at Twitter? Yeah, Twitter had done well. I haven't looked at those for a while. What have they done? They are still doing well, aren't they? It's a great run. If we pick up on the trend again off the March lows for Twitter, so for me that was a great opportunity. Again, perfect hindsight trade. The brief dip below the trend line in May, and it's bounced back. So again, for me, I'd still be looking for buying opportunities. I think an aggressive trade that we could even do now. It's pulled back to the lows from July at $64, and it's sort of held, hasn't it? So maybe that's an interesting one. Perhaps at the better risk-reward trade if it got knocked back towards the mid-50s. But that trend for Twitter is still up for me. Although it's been a while. It's been February since we saw new highs for that trend. So we'll wait and see. Can we have a look at 3M? Yeah, let's have a look at 3M. So big, old, traditional US global company. I haven't looked at those for ages, so look at them. What have we got? So the trend, like a lot of stocks, obviously, the trend since March of last year is still up. So it looks something like that. So again, for me, the trend is up. I'd be a buyer. The only question would be, where would my stop go? For me, the closest I want my stop, probably the other side of 188, these lows from late April. It's been a bit sideways over the last few months, and clearly the broader market has continued higher. But for me, that trend is still just about up, even though it's perhaps lost some momentum more recently. Peloton. I think I've got a short on Peloton. Oh, it's come right back to where we shorted it. We went short in a live stream on the 28th of May. Let's have a look. Let's have a look at Peloton. I think perhaps I should have moved the stop on that at some point, but let's have a look at it and see. I don't know. I don't even. I'm questioning actually being short at the moment. So we would have gone long, short here somewhere, end of May, wasn't it? And it looks like it's never really been in profit. So I suppose you could make the argument, well, the trend was down. And has the trend switched around in Peloton? It's well off the highs. The highs were 170 in Jan, and it's 112 now. I must admit, I would probably be tempted to be a buyer. But who knows? No one's got a crystal ball, have they? But for me, perhaps be a buyer with a stop the other side of 100. And it's actually convinced me to close the short. Let's get out of that because I'm bored of that trade now. We've been in that trade for 3 months. And it's not done anything. So I think it's an interesting one to watch next week, what happens with that one. But perhaps we have seen a shift in sentiment. But like I say, no one's got a crystal ball. So good luck with your trade, however it works out. Hang on a second. CrowdStrike, the old favourite. CrowdStrike, Security and Doodah from memory, isn't it? Security Solutions. The trend is still up, isn't it? It looks like it did make new highs for the trend, the 23rd of July. So again, it's when something's in a trend, you want to be a buyer on dips, don't we? You want to be a buyer on dips. So arguably, would you be a buyer now? Where would be the closest you'd have your stop? Well, the closest I have my stop would be the other side of $200. But that trend is still up on that one. And I think that's it, isn't it? We're going to wrap things up there actually a little bit earlier, if that's okay. So I think we'll wrap things up there. I think there's loads to watch at the moment. Stock there. We've looked at lots of individual stocks today, which I think is always interesting because we don't look at individual stocks that much on the channel, on the pre-recorded stuff. Of course, we've got that stocks channel, but with US stock markets so strong, here's the S&P 500. Pushing all-time highs again. There are, I think, still lots of opportunities in stocks in both directions. So subscribe to our stocks channel that's in the description to find out more about those. To find out more about the company, hopefully, if you haven't got an account with us, go and open an account. You can trade really small and try all this out. Go to Capital.com. DavidJonesTrading.com for more on me. Any questions about trading, david.jones@capital.com and @JonesTheMarkets on Twitter. We'll wrap things up. We'll do it all again next Friday at 2:30 in the afternoon next Friday. Good luck with your trading and have a good weekend.